Hi, this is Gary Romano, CEO of Civitas Strategies. As I mentioned in my post earlier this weekend, we're getting a ton of questions. Of course, it's tax season. We've been pretty busy. Um, this time around, we're going to be answering a number of questions that have come in over the past few weeks. It's just going to be me doing it real quick, so we can get these out to you certainly before tax season gets a little too far gone. So, first question we have, I want to do a fundraiser for playground equipment. How do I claim this or what do I do here? Getting all the donations via Venmo or cash. In this case, it's very simple. You claim the revenue like you would any other revenue. You deduct the expenses like any other deduction. Remember, though, if you're not a 501c3, if you're not an approved nonprofit by the IRS, the parents cannot deduct that donation. So it's different than a normal charitable donation. Can you help me? A parent is supposed to start on February 26th, and then on February 26th, she told me she had to move the date to March 4th. Since then, she has not answered my message, hasn't told me anything else. I want, of course, to terminate the contract. I don't know how to start the letter. What I would say is start with clearly stating the facts, just like you did in your question, right? And that, you've had these dates. This is really uh, you know, something where she has not kept, her end of this agreement. And so for that reason, you need to move on. I'm a licensed family home child care provider and running my own daycare in Auburn. Would I be eligible for unemployment if I were to close down the daycare? Generally, no. So unemployment can be tricky if you're self-employed. So I'm assuming that you are a sole proprietor. Um, and in that case, often you're not. It depends, not knowing which state Auburn it is in, because there's a few of them. Um, you would want to check your state regulatory agency in terms of unemployment benefits. Sometimes there's some at the state level, sometimes there's none. I'm retiring this summer. Can I claim time for cleaning, painting, and purging if the children are no longer enrolled? Not really. So um, what I would say is be very cautious about this. When the operation has ended, typically the IRS says the operation has ended. So when you don't have kids, it's over. You may be able, if you were audited, to justify some time that was very clearly related to the operation itself. Like, let's say, closing out the books, doing your last tax return, something along those lines. Um, However, stuff like clearing out furniture, painting, the IRS would look on that as you're just restoring it to its home, to your home, right? And that's really a personal impact more than anything else. If a parent chooses not to get their child immunized and they get sick in my care with something serious but preventable from shots, can they come back after me? Um, Parents who choose not to get their kids immunized, typically do understand the risks and benefits of it. You need to make sure that you're following your state guidelines. That's the most important thing. Um, when, what do I need to do if I hire my own children as employees? As far as I know, and she has a list, they can only work when they aren't at school on weekends and school breaks per California labor law. That's correct. Two, they should be doing jobs that apply to their ability. Also correct. And by the way, that's, true across the board. Their pay should be realistic. Absolutely. That's a national requirement. And I can write off $12,000 without them paying taxes. Is the 12,000 per child or combined? So I'm gonna put a link on this just to help you understand a little bit more closely. So when you pay your child, it's not just like it's an instant deduction for 12,000, right? You're actually engaging them as an employee. So you do want to document that they're an employee. You want to give them a W-2 at the end of the year. You want to run a tax return for them. It's not horrendous, but this is a place where you want to dot those I's and cross those T's. So we'll put that in the comments so you could see what we're talking about with some of those specifics, but it's not as simple as just saying we can deduct that amount. Hope you're doing well. I have a question regarding time and space ratio. I've never included square footage in the number of feet of my square feet of my home for time space. My accountant said I should add the square footage. Not exactly sure what you're saying when you didn't include the square footage, but I'm assuming that you maybe only used the amount that was exclusive use. Remember, with time space, you have to include all the square footage of your home, including basement and garage. That becomes the denominator, right? The numerator, right? The amount you're using is the exclusive space, and it's also that regular use space. So you need to include all of those. I opened my business in February, only have my daughter to care for till April. Do I start my calculations for the year in February or April? Do I include my daughter in the time space percentage? I'm open 6 a.m. to 5 p.m. Do I include her or do I put it down? My first paid child arrives at 6:30. Unfortunately, even when you're caring for your child and they take a slot, because I know, like, if you have a capacity of 6 and you're saying, gosh, Gary, I can only take a max of 5 because I need to care of my own child, or maybe 4 because I have 2 children I have to take care of that are mine. Unfortunately, in the eyes of the IRS, when it comes to time space, the children that you are bringing in are the ones that count. So in this case, you wouldn't start time space till April when you start caring for other children, and the time would start at 6:30 to whenever those children leave. I've been a licensed child care provider in my home in Champlain for 35 years. I think that this will be my last year of childcare. Um, and I'm just skipping over a couple of things. If I close my business and do not sell my house, what happens? Would I still have to add the depreciation back in this year, or does it happen when I actually sell the home? It's actually when you sell the home, there's depreciation recapture. So that'll happen. If you wait a couple of years, it'll happen then. Things to keep in mind, there's a big myth. I know Tom Copeland used to talk about this one all the time, still lingers out there. If you don't take depreciation off your taxes, that somehow you won't have to take it when you sell your house. You will anyway. So if I always recommend take the depreciation just as Tom did and just know it's going to be recaptured when you sell your home. I'm a state licensed family daycare, and in November, I purchased a hot water heater with a 10-year warranty that cost $3,319. Should I apply the time space percentage and record this repair as an expense all this year, or capitalize it and go after the energy tax credit as well? I purchased a $4,219 riding mower tractor in May. Do I capitalize and depreciate it? Likely, yes. So let's take each of these, or 3 different pieces here. One is, do you need to apply time space? You do, absolutely. From these costs, I mean, I couldn't imagine where they wouldn't have time space applied to them. Now, the question is, after you apply time space, is it $2,500 or more? If so, then you want to look at the depreciation options, right? If it's lower than that, yeah, it could be an expense in 1 year. Other thing to keep in mind, the energy tax credit only applies to the personal side of that expense. So if you are deducting part of that $3,319, you're going to want to make sure that when you fill out the paperwork for the credit, that it does not include the amount that you're deducting as a business expense. Aloha from Hawaii. Much warmer there, I'm assuming. I work with family child care providers, and questions come up about the need to report ARPA grant funds and pay GE taxes for Hawaii. Is it necessary to pay GE taxes on grant funds received? It absolutely is. The grants and other payments, any state you're in, are typically going to be taxable. You can, again, get the revenue, you have to report it. What you do with it that you spend on that's deductible, well, you can deduct that part too. I'm opening up an in-home daycare in my home, licensed for 6 children. I was thinking about creating an LLC, as I have a fair amount of assets and prefer to keep them all. After reading some information on your website, now I'm not sure. My questions are: 1, what's the difference between a sole proprietorship, an LLC, single person LLC, and a sole proprietor LLC? Are any of these things the same? Of the four, three of them are. So an LLC is a state level corporation. Because of that, you have to tell the federal government how you're going to be taxed under their laws. The default is is being treated as a sole proprietorship, or if there's two or more owners, a partnership. In the parlance, the way we talk about LLCs, you'll sometimes hear it called a single person LLC, sole proprietor LLC. They are treated as sole proprietorships. They are legally known as single member LLCs. So, but an LLC could also be treated as an S corporation or a C corporation. So that's where the word LLC, when you say an LLC, that doesn't necessarily mean that it's treated as a sole proprietorship. Which would I recommend you do? You know, if you're trying to just protect your assets, becoming a single member LLC definitely helps. It does move you up kind of one level because you have this corporation between you and the assets. It also allows you, if you ever wanted to technically sell the business, can't sell a sole proprietorship. In terms of which one I recommend, it really depends on your revenue and where you are in the life cycle of your business. We do have a guide that we can share, a free guide that will help with that as well. My licensing consultant, same questions, said I would have to give my SSN to parents, my social security number to parents for tax purposes if I create an LLC and apply for an EIN. That's not true. It's only she said that only if I apply as a sole proprietor can I use an EIN number. That's not true. You can use an EIN number whether you're a sole proprietor or you're an LLC or you're a corporation. Any of those is fine. If I end up going with the LLC, do you recommend getting business liability insurance? Absolutely. What's the difference, still continuing, between how you pay yourself, the different business entities? I'm going to upload that guide I mentioned that'll help you think about which one you may want to be, because it does talk about how you pay yourself a little bit differently there. I have a home daycare, and this is a new question. Sorry. I have a home daycare. We installed central air last year. Cost was $5,264. What's the best way to claim this on my taxes? Likely you're going to have to use depreciation. Again, think about time space first, then run that against that cost. If it's over $2,500, you're likely going to have to do depreciation. In this case, you may be able to use bonus depreciation. We're going to put a guide in the comments so you can see that and go through it. Why, when adding expenses, does the refund reduce? That's a great question. This confuses people all the time. The reason is that as likely this person's a sole proprietor, as they're decreasing their bottom line, right? They're decreasing their profits. Let's say you have right now a profit. Let's say, for the sake of just keep numbers easy, took in $50,000, you spent $30,000. Now you have 20,000 in profit. 50,000 minus the 30,000 is 20,000 in profit. Self-employment tax, so the first tax you get before income tax, is against that 20,000. So as let's say you boost your expenses up, now your tax bill is going down, but so is the amount of taxes that you're going to have to pay. So that's where you get into this kind of movement where sometimes you'll lower your tax liability, and therefore you're not getting as much money back because your income has gone down, and the amount that they're taxing you. What is the combined excess tax? That's an expression that's used when you have extra tax applied to income, property value, estate value. It's not very common. I've never seen it really come up, honestly, with childcare providers. How is it legal that the state of Missouri distribute grants from the federal COVID monies that was tax-free to the state and then distributes to childcare as taxable gross income? I was under the impression that any COVID-19 funding awarded by the state was non-taxable. As we talked about early, then this person got issued a 1099. The revenue, taxable. Very, very taxable typically. Do know that if in this case they send a 1099, great, you have it documented. If they don't send a 1099, still have to report the grant income. I'm working with a family child care provider who just had her taxes done. She pays quarterly taxes. Her total income in grants is 93,000. Her profit is 53,000. She had to pay an additional 5,000 in taxes. 17,000 sounds pretty high to me, so I want to check with you. She owns her own home, time space a little over 40%, you know, and then goes on and, said that she did use the homegrown guide that we have, TurboTax guide to double check, make sure she has all the deductions. Likely there's nothing more you can do at this point. The biggest issue is with a lot of these grants coming in, if you don't have the expenses against them, then it counts as income. And unfortunately, that does mean it's taxable. And this is the case going forward. So 2024, we're still seeing a bunch of those grants. Be prepared for that. I received a $34,000 grant for items for my home, childcare and childcare. With that, I received new flooring, sliding glass door. Both were in poor condition, need to be replaced. I understand that I may need to use time space for these items. Money was issued for the items. Now I have to pay taxes on them and not get the 100% off. It makes my income go up, which is now affecting my covered covered California health insurance premiums. So I'm worried, well, I have to pay back my premiums and or two surgeries I had this past year. What can I do? Is there anything I can do? Unfortunately, you do have to apply time space to it. And this has been one of the things that's actually been very frustrating for me. And I know a lot of you is that the grants will come out and there often won't be a reminder that the grant should only be covering the business percentage. So you get 100% of the given item. Let's say you get a new, heating unit, and for the sake of argument, let's say it's $15,000, and you go, okay, the grant's paying the whole thing. Well, those grant rules aren't your tax rules. So if we take that 15,000 and we say like this person does, they have a 40% time space, right? They're not going to be able to deduct that full amount. So the 15,000 they got is revenue, as I've been mentioning, but they don't have the deduction on it. So the full deduction, so that makes taxable income. And yeah, unfortunately, it does affect people's benefits. And this has been a big deal. Again, we've been wrestling with wherever we work, we're really trying hard to push this with the granting agencies is make sure people know and also provide them with opportunities where they can do that. For example, if they can include self-pay in it, well, yes, your self-pay also increases your taxable income, but it gives you a chance to at least take some of that money and put it aside for your taxes. I have several questions about my deductions for my family childcare business. Last year, we had to replace our failed septic system, which was $37,000, repair the backyard sprinkler system. And I'm just we had to reinstall backyard sod so that the children could play on grass instead of dirt. My CPA combined the three expenses and depreciated them. Like the sod and sprinkler system repairs should have been 100% deductible, not 100, but he's saying the CPA is saying it's not 100%, but time space portion is. So that's correct. So again, these are considered common area improvements, so they would be deductible in that way. Now, in terms of, again, that portion, that time space portion, so any time space portion that's above 2,500, you're going to have to figure out depreciation on it. Now, the one place I would question is if it's not done as one big job. So let's say the sod people were a separate bill from the septic people. There may be an opportunity there to break those up as two separate depreciable expenses. And so that might help you there. Also, she says, my licensor made me repair my shed, chipping paint for the safety of the children. We vinyl sided it. Can I 100% deduct this? Again, no. Unfortunately, it really depends on how much the shed is used for business. So I shouldn't say no entirely. So if it's 100% used for business, yes, you could. with the shed. But if, let's say, the shed is half used for business, half not, 50%, if it's just for the gardening equipment and stuff, time space it, if you're using your own gardening equipment to maintain the area, but just think about how much that business use is. I've received a California minor renovation repair grant, $2,800 in July 2023. The entire grant is to move an old HVAC and install a new one. The renovation was completed in September 2023. What expense category should I file this under? I mean, I would say the revenue goes under revenue, the HVAC, it's $2,800. Again, what I don't know is that your business portion? That's your business portion, then you'll have to depreciate it because it's over 2,500. Would be subject to bonus depreciation likely. So that should at least get most of it in 1 year. And if it's 2,800 in total, and then you put your time space, you actually just may have an expense that you can put under equipment. I use my cell phone all day long for personal business use. I don't have a second business line. I use it for personal and, and for children photos, parent communication, etc. Can I claim the cost of how do I claim the cost of a new phone? Is it a shared expense with my time space percentage? Typically, what we recommend is look at your annual usage of minutes and use that instead. That's going to be a more accurate number if you're audited. The IRS kind of points to the usage of minutes, so you could break it down. If, let's say, there was 1,000 minutes used over the year, and 6,000 or 600 were personal, 400 were business, 40% would be business use. And that's it. I got through all of them. Okay. So my apologies for moving quickly. I want to make sure you got these out. If you have other questions along the way, don't hesitate to ask us. Take care.